What's up, traders? Kaler here with Elite Trading, talking to you guys every morning, pre-market prep, going over our ideas, see what we're trading, see what we're talking about in the newsletter, looking at some charts together. But remember, we're not here to give you investment advice. We're not telling you what to buy. We're not telling you where to put your money, but we're telling you some ideas that might help you make some ideas for yourself as a future trader. And, let me put this shit on silent because we don't want this thing vibrating the whole time while we're doing this. So, ready to rock and roll this morning. We've got a great session set up and some great trade ideas ready to go. I'm going to drop the charts in the live chat after this in the Discord server. It's a private server. We have a link right below in the description, and you are able to join our group, and you can see these trade ideas and get these option spreads from Ben and get some ideas from me when it comes to some quick scalping ideas and some swings. So if you're looking for options training and you want to do some actual coursework and learn, that's also available. So that's whatever you're here for, doesn't matter. All we need for you to do right now for free is subscribe, smash that like button, kick it, punch it, elbow drop it, do what we always tell you to do, and let's get ready. Let's get to the newsletter. All right, Elite Trading Daily Newsletter. What do we got here? We have the ET Morning Brew, April 28th. It is 2021, and we're talking implied volatility. If you heard that term before, have you ever been learning about learning about trading and getting involved with the academics involved in watching videos, trading? If you see this, there's a lot of different ways to describe it, and people try to mix stabs and put stabs at it. So, in the top right there, you can just see that's the exact definition. Implied volatility, or IV, as you can see it in the options chain. This is when we're talking about implied volatility in options. It's just the market's assumption of the stock's future volatility based on the price of the stock's option. In other words, the rise and fall of an option IV will determine how expensive or cheap an option is priced. So, the way that I kind of always try to make it into layman's terms would be like if you're buying a baseball card from somebody and you have an implied value that's higher or less than what the current value of the card is. So let's say the card's worth $1, but you believe it's going to be worth $150 in the future, but you're willing to take $125 now. That's the fair value price, because the implied volatility would be that you're implying that it could reach $100 or $1.50, and you currently it's worth $1. So you're saying, okay, for $1.25, $1.25, I'll give this to somebody else. Well, instead of it being a baseball card, it's a contract, and it's a virtual contract where you're saying, okay, I'm willing to buy 100 shares of a company at a certain price right now at a certain date. And if I want to sell that opportunity to somebody else in the meantime, I'm able to do that. Or I could just write that contract in the very beginning, and I could be the writer of the contract. So understanding implied volatility is it's very key for you as a trader, for an options trader especially. So you want to understand implied volatility mainly, in my opinion, because of entry. So when you're going to enter on an option, you'll see that the guy jumping over the charts there, there's spikes and there's peaks and there's valleys. So that valley, you'll see that there's 1, 2, 3, 4, 5 marks that end up kind of getting into a clean area of support. Well, every time the stock goes down, at the top of that very first line, at the very first part right here, if the option price here is 300, and then right here it's worth 200, 260, 275-ish, because it lost intrinsic value based off of this first dip, because it's saying, okay, they're like, well, last time it didn't break past here, so therefore I don't think it's worth what it was here. So it's no longer worth 300, it's worth 280, even at the same price for the underlying stock option. One, you've lost theta, which is time. And two, you've lost some implied volatility. And so now when it drops down here again, then it's going to lose even more. And it's even going to be now less. And it's going to be worth, let's say, even like 150. And you're like, oh my God, I'm getting killed on this contract. I bought for 300. I'm down 50%. And a lot of times you'll see traders sell right here. And usually, as a trader, we tell you if you get a spike down against you and you meet a support level, always have your risk enabled and always have your ratio set. But if I see this chart forming and it breaks past here, well then yes, I'm getting out right here because it broke past the previous low and it's going to make a new low here. Once it ticked past there, I'm getting out and I'm going to wait for it to settle. And then down here, I possibly be looking for entry when I see it bottom out. Now you want this to be a longer section here. You'd like it to be wider so it gives you more time to understand where the true value of this option that you're purchasing is really supposed to be. So if you find one of these bottoms, you typically want to find one once you've found a clean support level. So let's say this is 5 minutes, 5 minutes, 5 minutes, 5 minutes, 5 minutes, 5 minutes. I might try to take a stab at this trade right here because now I'm not paying this big value, this implied volatility up here or here, 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 or here. You're telling me that it could go down to here, it could go up to here. It's currently here. Well, there's less risk down than there is up, so I'm going to go with stop loss underneath this previous low and hope that it continues to make higher lows from here and possibly get a rise in the chart. So what I want you to take away for today in implied volatility is that I want you to understand that it's something that's definitely essential to understanding how to purchase your option and why and where to get in. And it will help you with understanding why a option went strongly against you very fast, whether it's a bad news headline or a earnings report that came out negative or something of that nature that would affect the price drastically. And if you didn't have your stop losses in place, or if you didn't have your strategy ahead of time where you go, okay, I like this support level, but if something bad comes out, I need to be aware of this because this thing could just get hammered. Finding the relationships that it has with other stocks can also help you with future trades as well when you see what it does in reflection to them. So bullish trade ideas for today. We have Facebook, BTX, and YETI, Yeti. Get your coolers out. Summer's coming, baby. Bullish trade ideas results for day one after yesterday's call outs. These are the same things, just like these ones above. We did this yesterday, and this is the ones that we picked. TBI, DMTK, and GEVO. And TBI is 24.89% profitable if at the close yesterday, if you sold at the close. So DMTK 11.13% at the close yesterday, and GEVO down 1.53%. Didn't get a 3 for 3 like we did yesterday, but we'll take 2 for 3 at a 34%, 33.7% gain on the day if you go with those trade ideas. So great stuff there. Love what we got going on for you guys for the team. Let's get you to the charts today. All right, on the charts we have GME, DKNG, TSLA, and ET. Loving this. This is some good stuff here. So we have ET with a nice run, as you can see on the bottom left-hand chart there. This is our nice run here on the 1 minute chart. It's kind of just hanging out there this morning. Got a little bit of a bump there. But overall, I just like the way that we're starting to freaking round out. We're holding this channel that we built on the daily. And it's holding support at this. If it breaks through here, then that's when I start to get scared. But we want it to go target. Where's it at? 1253, 1252-ish. We would love for it to get up in this range. It's got to break through this 945. Might see some resistance here at the 950, 945 area. So I'll be watching that. GME with the nice breakout to almost 200 yesterday. And, then it just kind of peters out. And you're at 174, down $3.27 in the pre-market. DKNG called that one out yesterday. It's currently trading fairly flat, so watch out for that one. If the market starts to leak, then we may see some trouble there. SPY was a good short. There were some people calling that out, down $33 yesterday. It's up a little bit this morning, I believe. It's leaking a little bit this morning. And then we have SPY down 9 cents, trading flat. And, we've talked about this. You're going to probably see some consolidation before any major move, and it's most likely going to be another leg up. I mean, fortunately for the bulls out there, you're doing well, but unfortunately the bears are not doing well if they're trying to short this SPY. 396 was the big level that we have right here for the previous levels, and then 417. So I'm looking for support and resistance to find trade ideas, and possibly, you know, there's going to be some resistance in the future, but how can you find resistance at all new highs? So I don't short stocks making all new highs. That would be silly. Let's wait to see when they find a level of resistance that makes sense, possibly that 420 area. We'll see. Well, I hope you like your quick report. I hope you like this section, this session for today at the pre-market prep. We appreciate you. Stay blessed. Stay in the green, and we'll talk to you in the Discord server. Don't forget to hit that link in the description and join our team. Thanks. Have a blessed day, and see you tomorrow morning